in the last 12 months, starting with the Calgary floods and then moving into the floods in Toronto, we had two of the largest loss events, two of the 5 largest loss events in Canadian history that occurred within a month of one another, including the Calgary floods, which are now looking like they'll cost the property and casualty insurance industry about $2 billion, which would be the largest loss event in Canadian history. And then the non-insured losses, it looks like it's going to be a loss value of about $6 billion all in, and that would include government funds and uninsured losses that the consuming public may have to pay for themselves. So increasingly severe weather, regardless of its cause, is a reality. Other things that we're looking at is certainly technology, and I'm particularly excited about some of the technological advancements that are going to impact the property and casualty business. And we look at a few things like usage-based insurance, and every day there seems to be a study coming out on new developments in usage-based insurance, principally around auto insurance, but you can see it extending to other types of insurance as well. But on the auto insurance front, consumers are saying they want to be judged by their own specific driving behaviors and patterns. And they're now actually saying not only that, but they are prepared to modify their driving behaviors in order to secure lower premiums and those types of things. So maybe they're not going to be driving as fast. Maybe they will stop more smoothly, start more smoothly. So we're looking at some pretty exciting developments in those types of things. And we refer to it as telematics, where we have the ability to actually record the location of a vehicle, how many kilometers it's driven, the speeds, all those kind of things are very available to us going forward. I think the Canadian market is actually a few years behind both the U.S. market and certainly the UK market. It's going to come, and it's going to come pretty quick. I certainly don't see this being 5 years out before most insurance consumers understand and know what usage-based insurance is. However, I kind of refer to that as the Blu-ray phase of technology for the insurance industry. And the reason that I say that is that the Blu-ray phase it's end up being an exciting phase because it's big improvements on what we had before, but it's a very temporary set of improvements. So as we move along to things like driverless vehicles, vehicle-to-vehicle communication, some of the vehicle technology that's out there right now, if you were to buy a new Mercedes-Benz, one of the reasonably well-equipped new Mercedes-Benz, for all intents and purposes, they're suppressing the driverless functions that are already built in there. They can stop on their own. They can drive in between lines on their own. They can modify the distance between that vehicle and the vehicle in front by reducing or increasing pace. There's so many different technologies out there that we assume and we believe are going to significantly reduce crash rates, which in the end are great for everybody. They're great for insurance companies, but they're also great for consumers. As our costs go down of providing our product and service, so does the premium cost to a consumer. So it's going to be a pretty rapid transition. So I would say over the next 5 years, we'll move through the usage-based insurance phase, the Blu-ray phase, and then it's not going to be too far after that we'll start hitting on the streaming video phase, which will be the driverless vehicles. And maybe even at that point, if you're dealing with something that's less of a personal liability and more of a product liability, because it's out of the consumer's hands or the driver's hands as the vehicles become equipped in such a way that they can prevent crashes, maybe you buy insurance as part of your vehicle purchase. So there's some very interesting things that are going to happen in our industry over the next number of years. I'd also look at a few other things that we've got distribution channel strategy challenges, where the traditional Canadian way of doing business was that you had a broker in a retail bricks and mortar storefront. They would then retail the product of a traditional insurance company like the one that I work for, where we are the production vehicle behind their retail sales vehicle. And it's moving away from there. You're having insurance companies now own the retail front. You're having brokers that traditionally have used insurance companies look at opening up their own managing general agents and almost becoming a producer of the insurance cover themselves in that fashion. You've got direct channel business, you've got web, tablet, you have a whole host of different capabilities that are going to play out over the next little bit of time, and no one can tell exactly where this is going. It is one of those challenges, is to figure out what is the consumer actually going to want in the end, because the world does become more complex with a lot of this as well too. So while it seems like a great thing to be able to do it by yourself on the web, that requires a level of knowledge and understanding that people may not have the time or comfort to get involved with. So it's not a surefire win that if you open up a web-based operation that you're going to be a success. So it's interesting to see where it's going to go, and I actually am looking forward to the next 15 years of my career to figure out how all this is going to play out too. So those would be some of the key drivers. There are a few others, but those are certainly some of the key ones. I think some of the expectations and the involvement with government are going to be part of the challenge. If we deal with things like regulation of the auto insurance industry, it may seem foreign because we have the Insurance Corporation of British Columbia here, and it kind of removes a lot of the regulatory environment and pushes it onto a crown corporation. However, impacts such as the Ontario auto market, which ends up producing about 30% of the total Canadian premium base for insurance companies, if there's an impact there, it does hit the rest of the industry across Canada. So increased regulatory involvement. I think one of the recent things that they did was announce, and it was quite politically driven, that there would be a 15% reduction in the auto insurance premiums in that marketplace. Well, for insurance companies to then have to implement that, they have to look for ways to either they have to manage down their costs or what have you. And if companies see that as too big of a challenge, when you're looking at the Canadian marketplace as really, in the grand scheme of things, a small marketplace, especially compared to our southern neighbor, you will have a company like a State Farm, who very recently decided to sell their business in Canada. They are not indicating necessarily that it was specifically related to some of these regulatory changes in Ontario, but companies exiting the marketplace is not good for the consumers. It takes away some of the competition and choice. So, I would say the regulatory environment's going to be a challenge going forward. Whether it's, it also deals with capital. Capital, we talk about globalization, and I think most of the time people think of globalization as companies getting to pick up and move to other locations. Well, you don't actually have to pick up and move to other locations, especially in our business. It is more capital flows. So if you can get a higher return immediately south of the 49th parallel, which you can when you're dealing with things like earthquake insurance, and the BC marketplace is exposed to the exact same fault line and the exact same exposure as Seattle is. If we don't have a competitive product in terms of returns to capital providers like large reinsurance companies, multinational reinsurance companies, the Lloyd's market, if they can get higher returns immediately south of the 49th parallel, and there's no cost for them to just redirect capital, that's where we see challenge in the marketplace. Capital is now so international, so global, you have to be competitive in your own area in order to attract that capital into your marketplace and write business. And that's good for the consuming public here too. You need international capital to backstop something as big as the potential of a BC earthquake. I'm going to do very quick on my own experience. So my experience in the business, I've been in the business for 20 years, came out of university. I came out in the early 90s, which was an economy kind of like it was a couple of years ago, really crappy. So it was a tough economy, not a lot of jobs around. I had a degree in a Bachelor of Arts. Major was actually in communication. And I was trying to get into the public relations job, applied at a company called British Columbia Automobile Association. At which point they called me a couple of weeks later and said, sorry to inform you, but we've filled that position. Would you like to talk to us about the insurance industry? And I said, no, I really don't want to talk about the insurance industry. I got to try and find a job in my chosen career. And this brilliant HR individual, so you guys are looking at those opportunities, and I think about this even today when I'm doing hiring. That brilliant HR individual said to me, I tell you what, why don't you come work for us on a contract basis while you're looking for that job in your chosen field, and we'll support you as you do that. It was unreal. I was broke. I was living with my parents. Yeah, you know, a beer and pizza was my diet. I said, I can't really lose on that. Got into the industry and have loved every minute that I've been in there. I've been very fortunate. Worked for 3 well-known companies, and I've had great people that I've reported to over my career. In 20 years I've been in the business, especially in my first 10 years in the business, I must have had about a dozen different job titles in the first 10 years I was in the business, touched a whole bunch of different areas. Last 10 years, I've been in my same job now for nearly 5 years, but I've had about 20 different job titles in my career, so lots of fun. Job titles in our industry, and I'm going to refer to some of the growth in our industry so you can get a feel for what's happening for us, and this is since 2007. So we're dealing with a 7-year run. Our actuarial numbers are up by 87% in Canada. It's not a huge number of overall employees in the actuarial field, but what's there is up by 87%. Those are the ones that are figuring out how to charge consumers based on that usage-based insurance stuff. So you're going to hear a ton about telematics and usage-based insurance. 87% increase. Underwriting is up by 35% since 2007. Claims 33, brokers and agents, so the folks that you guys deal with on a regular basis, they're up by 33. IT is only up by 13. I thought that was an interesting number. Sales and service and management are both up almost identically, 52 and 51%. So significant growth. We expect by 2022 to have almost half of the current management crop retire across our entire industry. So it's an amazing opportunity for youth coming into our business, and we're actually getting a lot better at hiring young people. We used to have a big challenge with that. One of the good parts to a bad economy for insurance companies is that everybody needs insurance. We're a very steady, stable organization. So when the economy is not doing so well and other areas are cutting back on employees, etc., we do well in attracting employees. We're a very steady, stable organization. You know, we're not going to blow through 50 points of growth in a year, but we're certainly not going to go the other way either. So it's a very stable career, but lots of opportunity, and it's been good to me and a lot of fun. That's it. No, that's okay. I'm done.
A few questions before.
Absolutely.